What's up, guys? Welcome, Miss Siedda Herbert, to the channel.
Good
What's up,
morning. Good
Saida?
morning. How are you?
Doing fine, doing fine. Would you like to introduce yourself? Tell us a little bit about yourself
My
before we
name
get started.
my name is Siedda Herbert. I am a home loan expert at Affluent Home Loan located in Baton Rouge, Louisiana, and we make the home loan process easy. And notice I said home loan expert. Okay.
Uh,
Yeah, so I got started in real estate in 2015. I kept trying to look for a way to give back and to add value to people. Ran track at LSU, national champion, SEC champion, three-time All-American. And I knew when I graduated from college, I knew that wasn't it for me. So I just prayed to God and, got closer to him. And he told me, mortgages, that's what I want you to do. So here I am now. So.
so you've been enjoying it?
Yeah, it's definitely it's a task. All the time I get people who inbox me and say, "I want to do what you do." You know, they see the closings, they see me posting, different things, and they see the end result, but they don't see what's behind the scenes. So I love it. I love helping people. I truly feel like I'm on this earth to serve people, but it's definitely a task to do home loans.
I'm sure. So
Yeah.
tell us a little bit what goes behind the scenes.
So I mean, literally, some nights I may not come home to 8, 9 o'clock at night.
Damn.
12-hour days are the norm for me. And like I said, because at the same time, while everybody is sleeping or doing other things, I have to make sure that these loans stay on track because I'm that liaison. I'm that middle person. So I deal with the client, I deal with the realtor, the buyer's realtor, I deal with the listing agent, I deal with the title company, I have to deal with the hazard insurance, the appraisal, and the underwriters.
Everybody.
Yeah, so it's a task, and I make it my duty not to leave until everything is completed for that day. So,
Man, I never noticed you deal with all them people.
yes, yes. A lot of people don't realize that, and like I said, everything happens for a reason. When I did get started in 2015 in real estate, I just felt like I was going to make $1 million my first year because you see all these gurus and you see all these people online making all this money in real estate. But again, it's a building, to get there. So when I got started, I thought I was going to make all this money and I wanted to jump in and start investing, but everything happened for a reason. Now I'm in a better position where I feel comfortable investing in real estate as well because I know all the tricks and the trades. And I know, most of the time you think a loan is going to close in 30 days, it may close in 45 days. So now as the investor, on everything, I know how to structure deals in that sense to make sure that I'm not losing money. And if I say I'm going to pay a partner back in X amount of days, I know it's going to happen. So,
Yeah.
yeah.
Yeah. I remember we first met in what, 2016?
Yeah. Yeah.
He's the first person I replied to when I was looking for a little mentor.
Yeah, yeah, and I just and myself too. I still was learning. I got started with the Jay Morrison program,
Mhm.
and it was phenomenal. But I didn't have at that time in 2015. Wholesaling real estate wasn't that popular, so I didn't have anyone here to show me how to do the wholesaling. So, like I said, now I'm in the mortgage industry, and I add value. I bring something to the table. So I feel I'm going to be here a while, but still able to do other things in real estate as well.
Yeah. Well, yeah, and huge value with doing loans.
Yeah, because everybody needs money. I always say money, money, money. Show me the money. So
Yeah.
that's why I say I definitely feel like this is where I'm supposed to be.
So, do you plan on opening your own brokerage anytime soon?
Ah, the answer is yes and no. Eventually I want to expand out and do my own, but right now I'll be a fool, to do it right now on
Yeah.
my own. So eventually, that is my goal.
Takes a lot of experience.
Yes, yes. Like I say, it's a lot. My broker, I mean, she's phenomenal. She was a real estate agent for 25 years. Family things happened, so she actually took over the mortgage company that her husband was running. So she's been the brokerage, of the mortgage company for 7 years. But she's phenomenal. I mean, because she has the background of being a realtor, so she knows, what they're dealing with, and now she has the experience with the mortgage. So she's a phenomenal mentor, and God truly blessed me to have her in my life. So
It makes sense. That
yeah.
makes sense. All right. So tell us about somebody that's ready to buy a house. What's the first thing they need to do?
The first thing and the best advice I can give someone, and I did a post about this on my Instagram the other day. I said, don't self-diagnose yourself. Think about when sometimes if you may feel like your throat is hurting, or you may feel like you're about to get sick and your body just isn't feeling right. The first thing you say is, I need to go to the doctor. You're going to go to an expert to see what's wrong with you. Same thing with buying a house. Don't self-diagnose yourself. Block out the he say, she say, because a lot of times I find that it's not that someone can't qualify for a home, it's the fear of not being able to qualify. So the best advice, the best advice I can give someone is don't diagnose yourself. Meet with a professional, either whether it's a bank, a local bank, or a mortgage company. You need to meet with a professional, and you need to see where you are. Because I know with my clients, I do a consultation with all of my clients. I don't care if your credit score is 400, 500, 800, 850. I do a consultation because there may be some underlying things that's going on. And if I just pull your credit and say, hey, you have a 620 or you have a 580, you're approved, I haven't looked at your debt. I haven't looked at your income. You may have judgments. You may have liens. You may owe taxes. So my thing is just don't self-diagnose yourself. And we all have to realize that we're all uniquely different financially. So you can't listen to your cousin or your mother or your brother or you know, don't do it, because you'll never buy a home.
You're right about that.
Yeah, I mean, just and that's what I've seen is just the fear of buying a home. And sometimes we aren't taught to buy a home. A lot of people think, oh, it's okay to rent. It's okay to rent. The devil is a liar. It's not okay to rent. Yeah, and if you think it's okay to rent, then you need to self-check yourself, because it's not. And I believe in being transparent, because if I'm going to help someone, I'm going to give you the best advice to my knowledge. So first thing that I can give someone is do not self-diagnose yourself. Whether you want to start with a mortgage person for first or a realtor, that's totally, up to that person. But you definitely want to seek professional help, somebody who is licensed. So
Professional.
yes, professional help. So yeah.
Well, I remember when you was going back when you was talking about asking family members and all that. I remember 2015 when I built my first house. I didn't tell nobody.
Mm-hmm.
Until like
You've
a week.
been killing it too. You've been killing it.
Nah, I'm doing a little stuff. I didn't tell nobody because my parents really didn't support me. But
Mhm.
after I moved in and all that, they fully support me, especially now.
Yeah, and sometimes people like to see the results. Like I said, I got started, 3 years ago, and I quit my job, and because I didn't really, I had the knowledge that I learned from Jay Morrison. I had the money to invest in a business, and I quit my job, and that was the
As life goes.
that was the craziest thing I could have ever done. But I quit my job, chasing my dreams. But the great thing about it is I didn't give up. There was days, and my fiance and I, we talk about it all the time. There was days I was literally in the living room crying, like on the floor crying, just telling him why is this happening? But it was a part of the process. Like I say, a lot of people see this, they see the success that we're having, but it took a lot of bumps and bruises and hurdles to get to where we are, and we still have a lot still to accomplish. So
You right about that.
yeah, yeah.
All right. So first they get consultation. What's the next part? What's the next step?
So well, let me just expand on the consultation. So
Let's
a
hear
lot
it.
of times I get people all the time who call me and they're like, I want to buy a house, but I don't know where to start. And I'm like, great. Most people, that's most people. But I would say this: if you have someone, a mortgage person or a bank or a lender or whatever title, pull your credit over the phone, you need to run in the other direction. Because like I said, there's so much more to applying for a home than just your credit. So we do a full consultation. I ask the client to bring their pay stubs, their W-2s, their tax returns, their bank statements, and any other income, child support, social security. That way I can have the full picture in front of me, because once I submit your files to the underwriter, they don't know you. And
Yeah.
honestly, some of them may not care to even know who you are. So I'm that safety net for the client. So basically, I act as the underwriter until I submit their file. So that's why I ask them to bring in all that documentation. That way, if there's anything that I notice on their tax returns or pay stubs, I can say, hey, look, this may be an issue. You need to take care of this. Or, hey, you had late payments in the last 12 months. I'm just advising you that we're going to have to, write a letter or a letter of explanation. So basically, I prepare them for what may come. A lot of other companies don't do that. And I literally have people sit at my table, and after the consultation, they're in tears and they're like, thank you so much. I've learned so much. And I'm like, I know it was a lot that we covered, but you definitely want to sit with someone that's going to explain the process to you. Now, I'm not perfect by any means, but I try to make sure that when my client walk out there, they're confident. They don't have the fear about buying a home. So we do the consultation. They bring in all their documents, and that day I tell them how much they're pre-approved for. Now, if it's where they have credit issues or they have things that they have to work on their credit, I don't necessarily like to tell them how much they're qualified for, because you don't know. It
Mhm.
depends on what the credit does, when they come back to me. But sometimes I still tell them what they're qualified for. But once they're pre-approved, then they go to the realtor. They find their house with the realtor. I send all their information with their permission to the realtor. That way we all can be on the same page, because nothing's worse than trying to do a loan and you're not on the same page with the realtor and the client. So I send that to them and they go find their home. If they're not pre-approved, I tell them it's okay. It's okay.
Through
Life's
consultation, you can tell them what to do.
Yeah, I can tell them what to do. I say, hey, this is your action plan. This is what you need to do to get from where you are now to where you want to be. And I literally 90% of the time, if the client follow that action plan that I give them, they'll, achieve home ownership by the time that they want to. I've had a client come in, I want to say his score was like 537. He followed the action plan and he was 685. I had another client who came in, he was in the 500s. He followed the action plan and I got him up to 702. So as long as they follow the action plan and they listen to what I say, again, going back to the doctor, you're not going to go to the doctor. They say, hey, you have strep throat, and you're going to say, oh no, I'm going to take antibiotics. You're
Yeah.
not going to do that. So as long as they listen to what I say, they'll be ready. They can get that pre-approval letter and they can go and start, looking for their home with their realtor.
That's the exciting part.
Yeah, that's the exciting part. And I would say just some tips as far as, again, like some people, they don't know if they should go to the mortgage person for first or the realtor. You just want to be mindful. And you probably can expound on this. You don't want to start looking at houses that you may not be able to afford.
Yeah, that's a heartbreaker.
Yes, yes. So, and I've had clients to do that, and
Most
I
people do
feel
that.
so
Yeah.
bad. Yeah, and I feel so bad when I say, hey, you're only qualified for this amount, when it's 20 or $30,000 less. I mean, I've even had clients come to me and say, hey, I signed a contract. I have a purchase agreement, make this loan work for me. And I'm like, oh my gosh.
Yeah.
So when you're on the contract, that's a legal, legally binding contract.
Well, in that case, that's the realtor fault for not, because you're supposed to have a pre-approval letter before you even get to that
You're
point.
supposed to. You're supposed to. You're right. You're supposed to. But I mean, sometimes I'm glad I'm not in a realtor's position. Because
You're looking for that quick sale without doing the due
some
diligence.
some people are, but at the same time, I and I want to be careful with my words, but I find sometimes that
Don't offend anybody.
I find sometimes that some clients, they just don't have loyalty, you know. So sometimes the realtor is like, hey, just trying to make it work, because literally you can have a client one day and the next hour or two, that client can be with someone
Mhm.
else. Even if you've already worked with that client for 6 months trying to get their credit score up, I've ran into that as well. So it's interesting. It's interesting. Let me say that. So
I got you. So
yeah.
tell us about these credit scores. What's the lowest you can have, and what kind of loan could you get with it, and stuff like that?
Yeah, so with the company I work for, Affluent Home Loan, we can do a minimum credit score of 580. I always tell clients how the credit score work and why it is important to at least try to get your score up. Like I said, we can do minimum 580 with FHA and USDA, most of the traditional programs. So FHA, USDA, conventional, we can do the 580 score. Now, the way the credit score work is, so you have what's called your down payment and you have your closing costs. So when it's time to look at your interest rates, we look at your credit score and we look at how much closing costs the seller is paying. And that kind of dictates your interest rate. So the lender will say somebody with a 640 credit score, they'll give you money towards your closing costs, which is called a credit. And somebody with a 580, you still can do a loan, but they make you pay more
Yeah, they ain't giving no credit.
in closing costs, and you get what's called a discount. So we can do minimum 580. And honestly, if the client is just like, look, this is happening, I have to move today, then I'll, do the loan at 580. If it's just, hey, look, we have to move today, and they have a 580 score, but it's going to cost them and they're going to pay for it, in closing costs. But if it's minor things, if it's something that the client can work on in 30, 45 days, even 3 months, which isn't that long, because sometimes it takes you about 30 days to even find a house. Then
Hmm.
I'll say, hey, this is what you need to do to get your credit score up, just because it's going to put them in the best position to purchase in a home.
Okay. So basically, the lower the credit score, the more you're paying interest.
Well, the more you're paying fees.
And
So,
interest rate, right? Like
well,
the
yeah,
interest
because
rate.
your interest rate will be higher. You're right. Yeah. So I tell clients too, a lot of times they'll call me and say, hey, what's my interest rate? And I'm like, there's no way of me telling until we lock your loan. Typically, we lock the loan once you receive your appraisal, because once you receive your appraisal, then the value of the house, we know the value of the house, we know, because that's what we're buying. We're buying the house.
Yeah.
So once you get your appraisal in, that's when we look at locking your loan, because now we know you're about 15 days out or less from closing. So once I get the appraisal, that's when I lock the loan. And I have a conversation with the client and say, hey, these are interest rates for today. And you guys don't see it, but we see it on our end. Each interest rate actually has a dollar amount associated with it. So just for an example, let's say the interest rate of 4.5. That 4.5 interest rate may be a credit of $1,000. We see that on our end, and that's how we compute the numbers and the interest rate, but you guys don't see that. So interest rate literally change 2 to 3 times a day. So that 4.5%, it may give you a credit of $1,000 at 10 o'clock in the morning. But at 3 o'clock in the evening, it may only give you a credit of $500. So if you go to someone and they say, hey, I pulled your credit, you have a 680 credit score, you're guaranteed a 4% interest rate, again, run out the door, because
Yeah.
that person isn't giving you factual information, because there's no way of telling what your interest rate will be until I physically click the button and lock your loan.
I didn't know about the credits.
Yeah.
Teaching me something.
Yeah, so discounts and credit. So that's why it is important to get your score up to 640. What a lot of people don't know is, so I'm a loan originator, but a system approves you, a computer
Yeah.
approves. So I don't approve you. The underwriter doesn't approve you. A system approves you. So we put your file into this system, And once we've gotten all your information, all your bank statements, your income, all of that, we click the button and that system will say approved or refer. So you don't get necessarily decline. If you get declined, it's an underwriter that's declining you. So they have the final say so. But initially, a system approves you. Either a refer, which means this person can possibly get this loan, but
Yeah.
yeah, that's what a refer is. And then approve, I mean, you're approved, but you have what's called underwriting conditions, and sometimes the underwriters want you to meet other conditions because again, we all get audited. So if you default on your loan, guess who they're going to go to? Their underwriter, and they're going to go to my broker and say, "Hey, what happened? You guys did this loan. What happened?" So there may be extra precautions that the underwriter wants you to take. They may say, "Hey, I want to see 2 months reserves," or "Hey, I want you to pay down this account." So I'm going to give you a pre-approval best to my knowledge. But again, the system is the one who approves you, and then the underwriter is the person that has the final say so.
Mm.
So it's interesting. Again, a lot of people don't see what's behind the scenes, but
What?
yeah, I know you're like, wait.
I don't know about the system either.
Yeah, it's literally a system. FHA has a system, USDA has a system, and conventional has a system. We input your file in there, and it tell us if you're approved or not. And it's the good thing about it is we do it before we send it to the underwriter, so we can kind of play with the numbers. So if you get a refer, we can say, hey, well, let me show 3 months reserves in their bank account. And so reserves are basically just money saved up.
So
um,
then you can tell them, hey, you need this much
you
amount
need
of money then.
Yeah, this is what the system like. The system, when I did no reserve, the system said, we got to watch this person. When I did 2 months reserves, meaning you have 2 months house note saved in your bank account, the system said, oh yeah, I like that. So they'll have a heads up on, what they need. It's a
Mhm.
lot. It's a lot that goes into it.
See that?
That's why you need to seek a professional. Don't go about, the he say, she say, and you'll you'll get dizzy. So yeah.
All right. So look, if somebody's trying to buy $100,000 house, let's break down the RD loan, down payments, rural development, and VA and conventional.
Okay.
How
So
much is a typical down payment for each loan program?
okay. So if a house is $100,000, then for rural development, which is USDA, it's 100% financing. So there's no down payment. But remember, any loan program that's closing costs. So it doesn't mean, oh, I'm gonna buy a house and not pay anything out of pocket.
Mhm.
So USDA is no down payment. If you do a FHA loan, there's no restriction on the area of the home. So if you're in Louisiana, that's any area. Rural development is more of the Lafayette area, Gonzales, Prairieville, so the less developed areas. FHA is 3.5% down payment of 100,000. That would be your
3,500.
Yeah, that would be your down payment.
So
If you
that's all I need to buy a house. 3,500.
That's all you need. That's all. And the good thing about it is, now I have a lot of, I don't want mean to get off topic, but I have a lot of clients who have their refund check
So
from
it's
taxes.
perfect time around tax
Perfect
season.
time, perfect taxes. If you want to get ahead, you want to buy a house, that's the perfect time. If you don't have a down payment the rest of the months. When you get your tax refund, that's the best time. So FHA is a 3.5% down payment. And then conventional, we have a 1% conventional, we have a 3% conventional, and we have the traditional conventional, which is 5%. So the 1% and the 3%, that is an income-based conventional loan. Okay. So you can't make over a certain amount depending on your household. But because of the flood, any area that was affected by the flood, they've waived that income limit for 3 years. So you can literally get in the house for 3% down conventional. So I always, when a client come in, I always first, first thing I look at is USDA, because if I can save a client that $3,500 or that $3,000, getting into a home, then I always go with USDA. But a lot of people don't realize, a lot of people don't realize that USDA, it's an income-based loan. I am not lying to the government.
What's the max you can have is what, 78,000 or
Well,
something?
it depends on the household. So 78,000, all the way up to 100 and I think it's like $103,000 for a household of 5. So I can't,
Yeah.
I can't, that. But I always, that's the first thing. I go with USDA with any of my clients that come in. But USDA, the tricky thing about it is it only allows you to have 41% debt to income ratio for
Okay.
USDA. So it's no down payment, but only 41% DTI. So that limits you on the house you can qualify for.
So explain what's DTI for the people that don't know.
So your DTI is your debt to income ratio. So you actually have two. You have a housing ratio and you have a debt to income ratio. So your housing ratio is your front end ratio. So that's your house in comparison. So your new house, the house you're trying to buy, in comparison to your income. And then you have what's called a back end or your debt ratio, where it's all your debt compared to your income. So your house note, any loans you have, any credit cards you have compared to your income. So we look at both of those. So USDA is 41% back ratio. So when I look at all your debt combined, you cannot have over 41% debt to income ratio. Now, under certain circumstances, you can have more than 41%. So 680 and above credit score, 2 years on your job history. They look at those extenuating circumstances. So in some cases you can, but that's at the 680 and above credit score. FHA is same thing. Well, 2956, but you have to have over a 620 credit score to go up to that 56%. So that allows you to qualify for a bigger house. So everybody's like USDA, but it's only 41% debt to income.
Yeah, we don't know.
FHA, 56%. Yeah, you have to put down a down payment, but you can get a really nice home. Not saying you can't do it with USDA, but you can do it with FHA. And then conventional is a 50% DTI. And conventional is typically, I see a lot of investors do conventional. A lot of people who don't want to include their spouse, they go conventional. And that's another thing we need to touch on. Oh, well, we just want to use my husband's income and my credit score. No, it doesn't work like that. No, I wish it did,
Yeah.
but it doesn't work like that. So if you have, if you're in an instance where you don't want to include your husband or you don't want to include your wife on the loan, then conventional, is the route to go. Now they still have to sign at the closing table. So don't just think I'm gonna go buy this house. And so if you're married, they still have to sign, but that's a way to not have to count their debt against, your income. If you go USDA, you go FHA, you have to count their debt. If you're in a community property state, and Louisiana is community property. So yeah, I hope you guys have your notepads out, because it's a lot, that we're covering, but it's good. I actually have a realtor who I deal with a lot, God's Realty and Associates. They have these, instead of home buying classes, they have home buying courses, and it's typically
all the knowledge you drop.
Yeah, it's typically 4 weeks, but not only myself, but it's the appraiser. The realtor, she does her deal. She brings in a credit person, and it's all different days. That way you're not getting overloaded with so much information if you go to a traditional home buying class. She does a home buying course, and at the end of the course, you actually have a graduate. At the end of the year, you're actually going to do like a graduation commencement ceremony.
So it's a year-long process?
Well, no, just whoever closed in that year. So everybody who closed in 2018 at the end of the year would do like a graduation.
That's cool.
Ceremony. Yeah, it's definitely cool. So I'm happy to be a part of that. But I know it's a lot we're covering, so you want to make sure that you either rewind but you want to take notes. That way, when certain people come to you and say, "Well, oh, it's this or it's that," you can say, "No, that's not the correct information," because I hear some crazy stuff. He say, she say, some crazy stuff. But yeah.
I got you. Thank you for that knowledge. So let's see what's next. You explain the loans.
Mm-hmm.
So what's after that process? After they pick their loan, they have their credit score,
Mm-hmm.
they have the funds in the bank account. What's
Yeah.
after that?
So once you actually find your house, your realtor will send me your contract, and that's when the home loan process actually starts. Like you're in the home loan process. So I order the title. We talk about who you want to use for your hazard insurance. Any trailing documents that I don't have, I ask you to turn those in to me, and I send you your application. Once you sign your application, I have your trailing documents. I submit your loan to the underwriter. Typically, it takes 1 to 3 days for the underwriter to review it, and then the underwriter will come back and say, "Hey, I need you to explain this," or "Hey, I need this," or "Hey, I noticed this." That's what's called conditions. So if your loan officer call you and say, "Hey, the underwriter needs a letter stating this," or "Hey, the underwriter needs a clear copy of your driver license," or "Hey, I need your most recent pay stub," that's called conditions. And I can tell you this, no underwriter is going to approve a loan on the first try. So when I submit the loan, no underwriter is going to say, "Hey, approve." They're not going to do that because, again, they have to cover their butt. Now, I've literally gotten conditions back, and it was only one condition that I had to give up.
Okay.
But it's going to be something because the underwriter, the only thing they came back and said, "Oh, I need a legible copy of their driver license." I'm like, really? Like, you can clearly see all of the client's information, but they can't approve it on the first go run. So you're going to have what's called conditions. The sooner you get the conditions back to me, I'll submit those conditions back to the underwriter. And we kind of just go from there. We submit it back to the underwriter. They'll review all of the conditions. If they need something else, then they'll come back and say, "Hey, we need this." If they don't need anything else, then they'll do what's called a clear to close. My company that I work for, we believe in 2 touches, meaning once we submit the file, they're going to come back with conditions. The second time we submit your file, we want to clear to close. We don't want to keep going back and forth, doing that. But that's why I tell the client during the consultation to bring all their documents ahead of time. That way we can do those 2 touches and we get a clear to close. So once you get the clear to close, no, it does not mean go and get furniture. No, it does not mean go and get your car. It does not mean go and let people pull your credit. No, because the day you're at the closing table, the bank, the underwriter, or whoever you want to call it, they're going to pull your credit again. And if they see something new on your credit report, so don't, once you get a clear to close, don't think, "Oh yeah, I got my house, I'm going buy furniture at 0% interest on a credit card." Don't do that. And I tell clients too, be honest with your loan officer. Please be honest with your loan officer, because you want me to find out so I can fix it. If the underwriter find out, there's no fixing it, because again, they don't know you. A lot of them don't care to know you. So be honest with your loan officer. Whatever it is, tell us, because I guarantee you 99% of the time, we're going to find out anyway.
Have you ever ran into that problem that somebody went and buy something?
That's why I mentioned it. I haven't. Well, I've had one person who has bought something right after the consultation, right after I've given them the pre-approval letter.
Oh, they thought that was good.
Yeah, so that changed what they were pre-approved for. But I've had, people in my office where people were married and didn't say they were married, and they found out at the end that the person was married. So just be honest, because it's fraud if you lie on an application. So just be honest. We've had clients to forge documents, and it's crazy, but that's considered fraud, and I'm not going to jail. So just make sure that, you be honest and you do what's right, because home ownership, it's a big step, but long term it's a great investment, and that, it's a great investment. But yeah, after you get that clear to close, again, still don't take off from your job. Because some people go and before we get the clear to close, they'll reserve off. Once we get that clear to close, then we'll go ahead and schedule
Closing date.
your closing date. Typically, we try to do it, the next day, because you just don't want anything to come up.
Jeopardize that closing date.
Yeah, typically we do it the next day. If you have the opportunity to close early, meaning if your closing date on your contract is April 28th and you can close on April 20th, close on April 20th. Don't say, oh, I want to wait. Close on April 20th. Because you just don't want to you don't want to jeopardize it, and you don't want something to come up unexpectedly. So, and then two, if you wait until April 28th, the client may get fidgety, and hey, well, let me go and get this furniture. Too much time in between. So we always like to close the next day.
Soon as possible.
As same day. I did a closing Friday. It was the same day. Same day we got the clear to close, the same day we closed. So and shout out to Title Resource, because they made that happen. But yeah. But homeowners
closing today.
Oh, yeah, you did say that. Everybody not like, not like you. Maybe we can have every week, but no.
What do you mean?
I'm just kidding. Yeah, like I said, you're killing it, and I definitely want to commend you and thank you, for inviting me and giving me this opportunity. Because like I said, when we first started, we both was still trying to figure it out. So, and a lot of people a lot of people give up. So I definitely want to commend you for all that you're doing, and not only with the real estate, but you're seeking to add value, to people.
Thank you. I appreciate that.
Commend you for everything you're doing.
Well, thank you. Hey, but wouldn't for you, I might not be here.
Yeah, but yeah, and hopefully we can do some great things, in the future.
I got some stuff planned I gotta tell you about.
Yeah, okay. I like that.
All right. Well, let me see. I'm looking to go buy a house.
Okay.
I bank with Chase. What's the difference between me going to a traditional bank and going to a lender like yourself?
That's actually a great question.
Because most people like going, hey, I bank with Chase or, Capital One. I think they'll fit me well with a mortgage.
Yeah. So, and I'm not saying that they won't, but I compare it to Raising Cane's and McDonald's. If you go to Raising Cane's, all you're getting is chicken fingers. That's it. That's all you're getting.
You can only offer with Capital One or Chase has.
Exactly. That's all you're getting. You're getting chicken fingers. You're not going to get a burger. You're not going to get an ice cream. They're not going to do it. And I always look at a mortgage company like McDonald's. A lot of people don't like McDonald's food sometimes, but their service, if you want a burger, if you want nuggets, if you want an ice cream, if you want to order from your phone, you can do that. So that's the difference. If you go to a big bank, they can only offer you the products that they have. And a lot of times their credit score minimum is 640. So not saying that it's something bad, but
multiple options at a lender.
Yeah, and then sometimes too, literally, you're looking at a 60-day closing if you go to some of those big banks, because you have to remember that some of them are salary, and they receive a check whether they close or they don't close. So the sense of urgency sometimes isn't there. And I'm not saying all of them, are like that. But if you come to Affluent Home Loan, the only way that I can provide for my family is if I close loans. So I'm going to stay at work 12 hours. It's important. So I'm going to stay at work for 12 hours to make sure that, I get your loan closed. And literally, I've closed loans in, 17 days. So Capital One can close them in 30 to 60 days. I can close them in 17. So that's kind of the difference, between if you go to a Capital One or someone that's a mortgage company or a lender.
All right, I want to cover that because a lot of people ask me that.
Yeah, and then, okay, this is another myth or stereotype or whatever you want to call it that I need to clear up. So even if you go to a Capital One, even if you go to a Regions, even if you go to Essential, they are going to sell your loan. We are going to sell your loan. That's the way that we can that's the way we can facilitate more loans. Okay. So don't say, oh, well, do y'all sell my loan? Everybody in 2018 moving forward is going to sell your loan. That's the way that they can facilitate and provide more funding for more clients. They sell your loan. I mean, so don't think that you go to Capital One and you're going to stay with Capital One, because you're going to receive something in the mail saying, hey, my name is GMFS and I'm your new, mortgage lender. I mean, that's, after the crisis, that's what happened. So don't think if you go to, a certain company that, oh, they're not going to sell my loan. Now, sometimes they do keep it in-house under their portfolio product. So, it just depends. But 90% of the time, they're going to sell your loan. I mean,
my loans just changed. Well, it's still with GMFS, but it went to Servicing's Loans or something like that.
Yeah, so that's the servicer. So that's the person who's actually going to be taking your payments, and then distributing your funds to your hazard insurance and things like that.
That happened last month.
Yeah, and then you'll receive something in the mail. Something I want to touch on too. A lot of times I get questions about mortgage insurance, PMI.
Yeah, let's talk about that. That's some extra funds.
Yeah, so anytime you put down less than 20% on a loan, you have what's called the PMI. And that's basically an insurance policy on your loan that protects the lender in case you default. So for conventional, if you put down a 20% down payment,
no PMI.
No PMI. FHA is still the life of the loan.
Now, can you take PMI off once you reach your 20%?
Yeah, yeah, you can with conventional. You can. Yeah.
No, with FHA. Once you reach your 20% equity in the house, could you take off the PMI?
Not with FHA. Okay. So you just got to be mindful.
What about rural development?
No. So those are.
Let's stay on the loan until you refinance.
Yeah. So conventional, that's when you put down the 20% and you won't have PMI. Sometimes with FHA, I want to say I think it's like after 11 years or so, you can request for it to be taken off. But sometimes it just depends. But if you want to avoid PMI, you definitely want to go with a conventional loan.
Okay. Well, let's go back. And when you said you closed the loan in 17 days?
Yeah, 17 days. Yeah.
What makes how can you close a loan so fast, and what usually makes the process a lot longer? Like some people forget documents and all that. So let's touch on that.
It's doing so, and this is what I love about my broker. And sometimes you don't want to trust the process, but you have to trust the process. It's doing a strong consultation up front, because if you're dotting I's and you're crossing T's and smiley facing on the consultation, when you get the contract from that realtor, it's game time, because you already have all your documents. I don't have to call and say, hi, Mr. Parker, I got your contract from the realtor. Can you send me this? I don't have to do that. I already have it. I can just have a conversation with you and say, hey, I need updated bank statement, updated pay stubs, and I can rock and roll. So that can definitely determine if you close in 17 days or if you close in 30 or 45 days. And like I said, you're still going to have some things that come up to where, hey, they may need a certain documentation that may prolong the process. Sometimes you have appraisers that will prolong the process. All the time they say, hey, I've been finding probably 30% of the time, hey, I'm going to have your appraisal to you on April 20th and
don't show up to the 25th.
Yeah. So the appraisal that can, that can hold up, but I can guarantee you, if I'm doing your loan, I'm going to do everything in my willpower to make sure that you meet that closing date or you close earlier. Now, there's some things that's out of my control, to where we may have to extend the closing date, and understand that I don't want to say that's normal, but it happens. You know, if you have to extend the closing date, it happens sometimes. And sometimes it happens more than often because some things may come up that no one can control. Let's say the seller has a lien or the seller has a judgment. I can't control that. You can't control that. So things like that can cause the closing date, you know, to be pushed back. But to make sure that you do have a steady closing, you want to make sure that you do a strong consultation up front with the client.
Okay. So I think we covered pretty much everything.
Covered a lot. We covered a lot.
So if anybody want to reach you, where can they reach you at?
So I'll give you guys my office number. It's 225-960-4744. It's my office number. I'm on Instagram and Facebook at Siedda, Siedda, and my last name is Herbert, Herbert. I do appointments Monday through Friday, 9 to 5. You have to schedule an appointment. Do not just show up at my office. You know, you have to call me, 225-960-4744. Call me, and let's, you know, schedule a consultation, and just know that you have somebody that cares. You know, I'm not just here trying to make a check, because if I am, then I would never make that check, you know. So I'm here to honestly help. And like I said, I'm at the office sometimes 12 hours every day. You know, I'm about to get married. Sometimes my fiance is like, girl, you need to come home. You know, so you have somebody that genuinely care, you know, about you. It's not just, hey, I'm trying to get a check. No.
All right. Now I have all that in the description down below. Thank
Okay.
you for coming on this call. I
No
appreciate it.
problem. No problem. I appreciate it. So I'll see you soon.
All right, bye.
All
Thank
right.
you.
You're welcome. Bye bye.